Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com. Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Joining us this evening is a special guest host, CEO Ronald Mann of DNA Precious Metals. We'd like to welcome Ronald Mann as the new sponsor of SD Metals and Markets. So it's great to have you on the show with us here tonight.
It's great for me to be here, Eric. And John, thank you for inviting me, and I look forward to a productive discussion.
All right, well, let's get right to the price action of this week. A big update today in gold and silver here on Friday, but throughout the whole week, metals were down hard. Silver was down over 8% on the week at one point on Thursday. Ended up down about $1.50 on the week. Gold was hit hard as well, but had a bit of a recovery rally here today on Friday after down early in the morning, especially with some strong positive action in the access market this afternoon. What are your thoughts, Eric?
It looks like the pressure to price in advance of the Fed's tapering next week is what we've seen play out over the course of this week. Last week we had underscored how, in our opinion, the table was being set in terms of kicking the legs underneath the momentum of the upward move that we saw in precious metals previous, and a lot of that had to do with just kind of shaping around the edges in terms of the cartel and the way they act when it comes to price management and what have you. But then, as typically is the pattern, the normal speculative forces, hedge funds and so forth, are doing their anticipatory pricing in of the Fed's announcement next week. But presumably what may in fact be, as what consensus calls for, the $10 billion tapering, perchance focusing on treasuries more so than mortgage-backed securities, because that seems to be the consensus as far as what economists are calling for and what people were speaking about in the Jackson Hole meeting earlier this year.
From a technical perspective, I thought we saw a very nice bounce this afternoon, and I think gold declined down to the 30-day moving average and then bounced right off it. We've had a pullback from that low of below 1,200, and that run from below 1,200 up towards 1,400, and then it's pulled back, but it's bounced very nicely off of the 30-day moving average.
Yeah, and it looks very much like the patterns that we were expecting to see this week, and we were speaking about it on our last show. In advance of Friday, we were expecting a bounce back, and we got that, and then the pricing in of people fearing the Fed tapering announcement next week taking place over this week. And now, if you look at stock market, we had a nice move up at the tail end of the session. Oil also recovered higher as well. I mean, across the board, it just looks like risk assets, generally speaking, are getting more of a bid because people are feeling that the long line of sellers of the hot money crowd looking to exit in advance of the Fed tapering announcement have in fact already exited.
I would say it looks like probably 75 to 80% of the market has already priced in a small taper of QE next week, and I think up to probably about 10 to 15 billion is probably largely priced into the market. That if we do see the Fed in fact confirm a taper of QE purchases on next Wednesday with the FOMC statement, that especially the metals, gold and silver, are not going to see the massive smash that many are fearing. I think they may get hit, but I think it'll be short-lived, and the strong hands are going to come in, and I don't think we're going to retest the lows by any means. If
I can jump in here as a off-the-cuff technician, the gold to me looks like it bottomed below 1,200, and we're in the long-term bull market, and gold is picking up again, whereas in national resource stocks, particularly junior national resource stocks, generally it's felt that we're in a bear market, and we've got a ways to go before we come out of it. So the physical gold and silver are commodities that are going to outperform. There's exceptions in every case, and I believe DNA is one of them, but are going to outperform natural resource stocks.
Right, I think we would agree with that to a large extent here, that both gold and silver, we believe, have bottomed that first week of July, with gold touching 1179 and silver hitting 18. I wanted to quickly shift focus here to, I think, one of the biggest stories of the week that really didn't get a lot of the attention it otherwise might have with all the focus across all the media on Syria at the time. And that was the news of Poland nationalizing or bailing in its public retirement funds. Poland basically making the announcement that the government retirees would see 50% of their public retirement funds nationalized. Again, it's not just a one-off with Cyprus. We're seeing it again. And the next financial crisis that happens in the Western world, whether that's in the U.S. in a couple of years, 2015 through 18, I believe that it's the largest pot of easiest to grab money for the authorities. And I still think that that's one of the greatest risks is either nationalization or bail-in, whatever you want to call it, of the retirement funds being forced into the treasury bonds to help support the treasury. What are your thoughts, Ronald?
Well, we work in Quebec, and the people have said to me that the Quebec government, which is not as healthy as from a financial perspective as it might be, has cast a fond eye on the Quebec Hydro, the pension funds, and the case, the depot, and that's I think where governments are going to head when the Detroits of this world become not just isolated but all over the place.
Yeah, in fact, the debt ceiling issue is going to be front and center in the weeks ahead in the United States. In fact, all of the games that we have been playing to be able to have our servicing of our national debt with movement of retirement accounts, or better said, the pension accounts, particularly in the military, and temporary surplus that arrives with Social Security funds that are coming in as paychecks are issued and so forth, are allowing a lot of games at the Treasury to take place to buy some time. But that game process is coming to an end game. The headlines are going to shift, and people are going to focus on the whole debt financing issue. And it wasn't that long ago, about, I believe it was late 2011, that when the S&P downgrade of the United States debt and the issues that brought a focus to all of the longer-term fiscal problems and challenges that are facing many Western countries, including the United States, put a huge bid underneath the precious metals market.
If I recall correctly, gold was up about $300 during that whole debt crisis fiasco where they were threatening to not raise the debt limit, and gold ran up towards its high of, what was it, about 1915 at its high before, we're right about the 2-year anniversary of that nominal high of 1915. I agree that we could see strong moves ahead here on the news shifting back to the debt ceiling, and I mean they're going to have to raise it to somewhere around 18 to 19 trillion this time.
Yeah, and even when the precious metals markets were trading at their high, gold as a percentage of net financial assets for a typical holding across the board in both the United States and worldwide, it still represented 1.5 or so % of net assets, which is historically very, very low. And most of that is represented by paper gold, which can be bailed in all of these MF global style situations and what have you. And there's very little or certainly insufficient appreciation in the North American market, particularly in the United States, that owning physical gold in hand is really the ultimate insurance policy. And most people still are of the perception that the bear market in gold is on, and in fact, as Ronald had noted in recapping the technicals, that's not the case. I mean, we're clearly still in the bull market, and the fundamental drivers for it are actually going to start amplifying themselves and become more visible to people. So,
one of the interesting things that was said to me a week or so ago, our metal sales are to Johnson Matthey, which is the largest refiner of gold and silver in the world. We had a tour of the refinery here in Brampton, and there's only 60 labs in the world which are authorized by the London Metal Exchange to refine gold. 30 of them, 50% of them are in China. And most of the gold in the world is actually produced in China, but it was mentioned to us that none of it ever leaves. And it all stays in China. And I've heard that the buying of physical gold in the Hong Kong market is very strong and increasing, and that's coming from China. And the prospect we face is that China will stop buying U.S. bonds and just buy physical gold. If that happens, then we have the next financial crisis.
It's actually been happening to some extent. They're still buying some of our mortgage-backed security issuance, and on a net basis, actually in July it was reported that they, in combination with Japan, had sold $40 billion worth of United States treasuries. They were the first time net sellers on a large-scale basis in all of our history. So that process is actually beginning to play out. In China, they have a declared reserve of 1,050 metric tons, last declared in 2007, if memory serves. And, just within the process of the first 5 months of this year, over 1,000...
I think it's 1,200 tons.
Just a really large number of metal was delivered off the Shanghai exchange and primarily directed towards the central bank, and it was in excess of the formal reported 1,050 tons that China claims to have on their reserves. So they've been hoovering up gold like crazy, and in the meantime, the inventories on the COMEX, the inventories within exchange-traded products, they've all been plummeting, and this is not sustainable. It's going to end up creating a condition where mine supply will be diminished because of these lower prices, hurting mining companies, and then the physical availability of gold being far less available. And we believe, as John and I have been reporting on our show for quite some time now, all of this significantly anomalous GOFO rate statistical indications speak to this phenomenon in an incontrovertible way. It shows that the market has in fact been super tight throughout this whole process, and it speaks to the fact that, once again, the gold market, bull market, remains and will be roaring forward in the months ahead, in our opinion.
Just last night I took a look at the COMEX registered gold inventory, and I took a look at the chart, and it's rather quite astonishing. In a little less than a year and a half, the COMEX registered gold inventory has gone from, I think it was over 3.5 million ounces down to it's around 630,000 and change. So just an astonishing drop-off in their physical gold inventory in the registered category for delivery at the COMEX.
We've heard reports from a lot of refiners in the European area that they're working overtime to create a lot of new gold bars for the China market as they pull gold bars off of the London Bullion Exchange. So it's definitely quite a bit flowing eastward.
When we toured the Johnson Matthey refinery 10 days ago, they told us that they process from around the world, mines around the world, $8 billion of gold every year, of gold and silver. It's the largest refinery in the world. It's based just outside Toronto and Brampton. Most of the Air Canada cargo planes flying into Toronto have gold in their cargoes.
Talking about Johnson Matthey is a good segue here. I just want to give the readers, or the listeners, I should say, a quick update on the wholesale market in the U.S. here. Supplies started to tighten up a little bit again this week. The mint products of the Silver Maples and the Silver Eagles, premiums on the Eagles jumped about 25 to 30 cents. They are all, for the most part, live at all of the largest primary dealers and suppliers. A couple of them are on a couple weeks delay. Maples are all live across the spectrum, and premiums are holding pretty steady. 90% is back in supply really across the spectrum of the wholesalers. As for the first part of the week, there really wasn't too much physical demand. Sales were pretty slow across the board, retailers, wholesalers as well. It wasn't until Thursday's big $1.50 smash and then the recovery today on Friday that brought out the buyers. 100-ounce bars, or the Johnson Matthey bars, are finally starting to show up at a couple of the suppliers. They're on somewhat of a delay, but that's the first we've seen those kind of in a while. So, and the other one, the Royal Canadian Mint bars, are back in supply at the largest U.S. wholesaler live, so that's the first we've seen those in quite a while. So supplies on the retail side, the shortage still continuing to lessen and ease up a little bit, which is nice to see for the physical buyers as they're able to get product without paying the exorbitant premiums. So that's a quick update on the wholesale market in the U.S. And we wanted to get over to talking about DNA precious metals particularly, as they've got some pretty exciting news coming out here early in 2014. And Ronald, if you could describe to our listeners your tailings model. I think a lot of our listeners, they're familiar with a junior miner or a major, but they may not be familiar with specifically tailings ore and recovery. So why don't you give a little bit of a description about DNA and get into that a little bit for us if you could.
Delighted to. The tailings model for starting production is not new to DNA. Amerigo is a Toronto Stock Exchange listed company that processes copper from the largest copper mine in the world in Chile, Codelco, and has a long-term relationship with them. And Amerigo is a great stock. I think it pays a 7% dividend. The Las Lagunas in the Dominican Republic is a operating tailings mine that was obtained by an Australian public company with the cooperation of the state government in the Dominican Republic, and that started up production last year. However, DNA is the first economic tailings mine, dedicated tailings mine, we believe, in Canada, and particularly in Quebec, and probably at this point also in North America. The company model is to start small. All-in capital cost is under $10 million. So we don't have that business plan model of 100, 200, 300 million to get into production. The business plan is to start small and then acquire additional resources, which we're actively negotiating. The founders of the company invested over $4 million towards the initial production, and then we went public in August and built the we started trading in August. In fact, the company had done an initial public offering, although it was private, before that on the OTC market. But trading started in August, and prior to that, the property had been acquired. We had done a technical report on the property with Canadian standards called a 43-101, establishing the resource, built the mill building. The residues are from the former Montauban lead zinc mine, which is 100 kilometers west of Quebec City. And the mine operated for most of the 20th century as a lead zinc copper gold mine, and latterly in the late 1980s as simply a copper gold mine. The grades are high in the underground mine in certain sections in gold and silver, and recoverable in the base metal section of the mine. The historic residues have economic levels of gold and silver, and we targeted those as our initial production target, and are headed towards the commencement of production in the second quarter of 2014.
Focusing on the tailings first and foremost.
We're starting with the tailings. We are actively negotiating additional residues with the Quebec government for other orphan sites, tailing sites, which are nearby from the former Montauban mine, called Montauban United and Tetra 1 and 2. Our initial target production is called the Anacon deposit. In addition to that, we are also actively negotiating acquisition of the underground mine. And the business plan is to start with the residues, establish that as a business, and acquire additional residues, both in Montauban and potentially in other locations in Quebec or elsewhere in North America, and as well as acquire the former Montauban underground mine and go into production there as well.
One of the really nice things about this business model is that you're dealing with a known resource base without having to actually go and build a mine and go through the risk of actually employing all of that infrastructure and the problems that can come with mine development when you're dealing with tailings up front. That whole risk prospect is no longer an issue, and presumably that gives you a lot more visibility on your cash flow as well too. So I was wondering if you can speak to that and speak to how that makes your company different as opposed to, say, a junior miner who's looking out at the exploration stage or even moving forward to the development stage.
Well, we did a very short exploration program on the Anacon resource and developed the 43-101 to establish the resource. It's small. It's only 440,000 tons of approximately 1 ounce silver and about 0.35 grams gold. It's about 0.84 gold equivalent in terms of the resource. However, for a surface deposit that's already been crushed, and that's a pretty good grade and economic. There are underground mines that, or actually not underground mines, but open pit mines that have lower grade than we have, and they have to do a significant amount of crushing, and they need very large production per day in order to make an economic operation. Our 1,000-ton per day mill will process the tailings from the Anaconda deposit and be profitable from the commencement of production, and has a very low initial capital cost because we don't have the large exploration expenses, the large multi-thousand-ton tonnage requirements to be economic, and we are buying and have sourced used equipment to start up the mill.
Give our listeners a sense of what you see as far as your timeline, your milestones, and what you're looking at as far as production going forward, and your long-term vision for the company.
Well, in the short term, we have our initial permit from the Ministry of the Environment in the province of Quebec to operate a gravimetric permit, and that permit was issued a year ago. In the spring of 2013, we applied for an upgrade to that permit to allow a cyanide closed Merrill-Crowe circuit, which is commonly used in Quebec, for increasing the recovery of gold and silver in the mill. In addition, the Ministry of Natural Resources in Quebec has to issue a restoration permit to operate a restoration facility, because we need to put the residues after they've gone through our mill, and they will go back into the Anaconda site. The mill building is immediately adjacent to the tailings pond, and so we don't have large transportation issues. We're slurrying the residues up the hill, which is about 50 feet, and in vertical rise, and then putting it back in the tailings pond. But we have to design a dam system and secure the residues back in the tailings facility from an environmental perspective, and we have to meet the strict targets in the province of Quebec for environmental containment of any emissions from the mill, as we are using a cyanide circuit. We have spent months developing a neutralization process for any residual cyanide that comes out of the mill with dolomite, so we are below environmental standards, and we're very happy that we are below those standards, because we want to be environmentally responsible. As we go into the fall, we are looking at $6 million in production financing to acquire the equipment and provide working capital until we start production in Q2 of 2014. Final permits, actual purchase of the equipment, which is all sourced and ready for us. Refurbishing that equipment, as we've bought used equipment, and we have to replace the valves and the pumps. And then installation of the equipment and startup of the initial mine. Startup will occur after spring thaw, and after we start up, we'll be able to run 12 months of the year. However, initial startup has to be after thaw, because we need to keep everything moving, and we won't be able to start it in those cold Quebec winters.
So when it comes to financing in this tougher environment, how are you looking to go about it? Are you looking at debt financing, secondary offering with existing investors? What's your plans?
Our founding investors have been very supportive of the company and continue to be so. We have ongoing negotiations with hedge funds for financing the production, and look forward to the resolution of that in the near future. The financing can be, it will probably be a combination of debt and equity. We're in the position to able to secure about half of the requirement with secured equipment financing. In addition, we're in a position to forward sell and enter into a streaming contract for silver. Our production contract, which is upcoming, for sale of our precious metals. We hope to enter into a contract with a large metal refinery soon. Will include provision for third-party delivery of silver doré pursuant to a streaming contract.
For our listeners who want to get in early on DNA before hopeful production next year in 2014, if you can just clarify again the symbol and how they can do that.
The symbol is DNAP. It trades on the over-the-counter board QB. We have 90 million shares out with a market cap of about $30 million. We hope to grow the company into a medium-sized producer, both of gold and silver, with environmental remediation, residue business, as well as mining underground. To come back to my property and management, we have an outstanding management team that has an illustrious board. One of our directors was the founding CEO of Barrick Gold in 1982, 1986, when it acquired the Canflow mine in Quebec for $100 million. Gary Last, and of course Barrick is now the largest gold producer in the world. And Ted Kreber was president of two very large international commodity distribution companies, as well as director of many companies in his career. I have 15 years of experience in mining. Yves Gagnon has 35 and is very known in Quebec and has supervised large tailings projects, tailings restoration facilities in terms of shutting down mines in other mines in Quebec. We have 50 years of combined experience in the mining industry. From a property perspective, it's a very nice, small but low cost and very economically successful forecast for the production. That looks like a winning combination to me.
All right, so very exciting time for DNA Precious Metals, and we're excited to join a partnership with them as they sponsor the SD Metals and Markets for the remainder of 2013. One other thing I wanted to discuss quickly before we wrap up the show for this week, news breaking after the close here on Friday night with Andrew Maguire over at King World News breaking the story that the two whistleblowers for JP Morgan, Andrew Maguire breaking the story that officially that the CFTC has had their evidence of market manipulation, particularly in silver, for over a year. I think it was August of 2012 that was originally submitted. And Andrew Maguire included a note back from CFTC's Bart Chilton, who advised Andrew Maguire that if the agency doesn't do anything by the end of the month, Bart Chilton said, and he quoted here, "I will not let September go by without speaking out if the agency doesn't do so."
However, we should reiterate that that's exactly what he had said 2 years ago, to the month, actually, when it came to the,
Just about, yeah. He, last year, he informed me personally in an email that,
right.
But it wouldn't be before the end of September. Well, he had, to be fair, he had said that the commission would make a ruling by the end of September, so he had promised me that. But so now he's going on and saying that if the commission doesn't say anything by the end of September, he's going to come out and speak out publicly.
And then 2 years previous, it was the fact that, in the context of the 2010 hearings where Andrew Maguire first came to the public stage as a whistleblower himself, that in the aftermath of those hearings and the buzz that was going on for the whole subject for many, many months, Chilton had said sometime in July that if by September nothing had been discussed, that he would speak more to it. And in fact, his story was pretty much muffled.
So we won't hold too much hopes out for Bart Chilton, but as all of our listeners are aware, the Libor manipulation, that wasn't something that just began in 2012. That had been going on for years and probably decades, but it was media attention that forced the regulators to act and initiate a probe. So
this all also comes in the context of yesterday's news from JP Morgan of their investment of $4 billion to increase their trading desk supervision and beef up their controls.
Litigation reserves.
Yeah, and litigation reserves, $2.5 billion of that $4 billion flowing into the reserves to be presumably deployed this year, because they spoke about it in the context of this year's reserves, quote unquote, which is pretty darn interesting. It suggests that perchance they're expecting some more fines coming down from a regulatory agency somewhere. So who knows?
Somebody mentioned to me today that they all have 5,000 people in compliance.
And they're supposedly increasing. That was the number they were going to increase. I believe it was the 5,000 person increase to their compliance department. So whatever their existing department headcount is, which I don't know, they were speaking about increasing it by another 5,000. So if you make a mess, you have to clean it up.
And again, this isn't new information, as we first published the whistleblower's testimony in, I think it was early summer of 2011, before he subsequently was connected with Andrew Maguire's legal team and submitted the official documents to the CFTC in August of 2012. But the story is now going public in a large way, and it'll be interesting and exciting to see what happens from here if it does start to get a little bit more mainstream traction and attention like the Libor scandal did and blow up as it could quickly.
So we should probably just recap where we're looking for next week, because it's going to be a really busy week. We have the Fed coming out and reporting as to what their decision is going to be regarding tapering, and our consensus is that we don't expect the markets to sell off any degree violently, but we might have a small dip leading into that announcement. And it really does look like we've settled, that the markets have stabilized and are going through a process of a short-term bottom and then deal with the Fed announcement as it comes.
All right, so for the Doc and Eric Dubin, thanks again to Ronald Mann, the CEO of DNA Precious Metals, for joining us. Thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.